Hello, everyone. Welcome to the stock-specific class here for Thursday, February the 18th. A little bit more energy in this update than I did on Tuesday. A little sleep-deprived on Tuesday. But now, before I get into the update today, the training today, I'm going to get into using Elliott Wave to provide context to what you're looking at. I think a lot of you will find this interesting if you've been following these trainings on Elliott Wave. We're going to start to apply it. So we're going to look at some charts. In fact, we'll apply it to some of the specific stocks that we're getting into today from the list. And I'll show you how you can apply Elliott Wave and how I apply it. And again, I emphasize that I'm not an Elliott Wave fanatic, and I just don't teach it that way. And you can start to see why as I go, why I'm not a fanatic and why I don't get obsessed with Elliott Wave like some people do. I keep a balance to it, balance it out with everything else, and it works great when you do that. When you get too fanatical about it, you'll get frustrated because you're expecting it to tell you the future, and it can't, it won't, and then people get frustrated and then they dismiss it and they miss the whole value of it. If you combine it with everything else and use it in balance with everything else, it works great. It's helped my trading so much over the years when I've applied it that way. Another announcement real quick too is I'm going to be out of town next week, and I don't know my schedule. I am going to do the 2 classes, but I don't know my schedule yet, and so there may be a chance that the live class gets moved at the last minute. It might be even on a different day. So if you happen to log in there is a good chance that if I do it on Tuesday and Thursday, I'll do it earlier because I'm going to be on the East Coast, and it'll be in the middle of the afternoon if I do it out there. So I might do it a little bit earlier in the day. Maybe even right as the market is opening, but it's possible it could be a different day as well. If for some reason you go to log into the live class and it's not there, just look for the recording and review the recording. I could just take the week off and not do it, but I know a lot of people kind of rely on these updates to kind of help them, and so I'm going to try to at least make sure they have a recording of it they can review and get the update they need. And it might be a little bit of a shorter update depending on how my schedule plays out, although I always say that and then I ramble on for an hour. So anyway, let's get started. And we just want to review. We're not going to do a complete market update. We always want to just kind of see what's going on, though. With the market selling off a little bit, we are going to see the indicators move back this way a little bit. We are off the extremes now. Because we are off the extremes, hold on here. I want to change I usually like the red for my pen color here. Because we're off the extremes, it can mean that we have further to go. And in the longer run, I still think we have further to go up, but with the way the market is acting this week, it makes me feel like we could get a little bit of a pullback here. We have started to, but we could see a little bit more downside before we get that push higher. When the market is having trouble moving up, it means that the buyers are just not strong enough or not confident enough, and sometimes it takes that sell-off. I've mentioned this many times before, but sometimes it takes a little bit of a sell-off to create that buying opportunity. People feel a bit more comfortable buying in a market pullback. Now, a market pullback can also hurt people that are in their long positions, and it can drop on them. But it usually needs a little bit of that, a little bit bigger pullback to kind of attract maybe some of the buyers on the sidelines. Now, another thing that we're noticing, and you have to keep this in mind. Now, these are things that they're not exactly going to tell you what the market can do in the near term, but it is something to keep an eye on, and that is that through the last few months, what we've seen is, and you may have noticed this if you follow the bond market, but the bond yields have been going up, and they're getting to a point now where they're high enough. Remember, the bond yield is, I mean, that's pretty much one of the lowest risk trades you can make. And so, you know, if I'm a fund manager and I can put money into bonds and make 1.5% pretty much guaranteed, or do I keep my money in the market in riskier trades? I have the potential to make more, but what if I don't expect the market to go up much further? What if I'm expecting maybe a 3% rise in the market, but I can get a guaranteed 1.5% in the bond market? I may choose to go. I've had a good run. I may choose to go put that money in a safer place because I might feel like I'm getting near the end of a trend here. So now, what's kind of kept that decision down in the past is that the yields have been so low, and even when we've had some of these rallies, the bond yields have been so low that you have to stay in the market. There's no money to be made in the bond market. And so, but now these yields are creeping up, that decision becomes valid, particularly since the market's had a good run. Now, I'm not saying that these fund managers are going to be right about being at a top or anything like that. Could the market still continue to go higher? Absolutely. But what that's going to affect the most is it's going to affect particularly the Russell 2000 and the NASDAQ and the NASDAQ 100. Those tend to be the riskier, or they're the smaller companies that have the potential for these bigger moves. So there's potential to make big returns, but they're riskier because they're smaller companies. So I'm watching really carefully today the Russell 2000. It's been a lot weaker than the other indexes, and I'm also keeping an eye on bonds to see if those yields keep going up to where it might have that effect. And remember, we talked about how the Russell 2000 has been leading the market. It's led the way up. It's likely going to be the one that leads the way down when a bigger correction starts. Now, again, I'm not calling for a big correction right here, but these are things we want to start paying attention to, along with our indicators here that can tell us when we're getting to some of these extreme areas. We started seeing extreme areas on these indicators, and those bond yields getting up to a higher level. Then we're going to have to consider the possibility that we could be in for a much bigger correction. So we'll keep an eye on that. But you can see these indicators are backed off. They're not at extreme levels. We take a look at buy-sell ratios. These are going to come closer together with the selling today. Now we are at the lows of the day, and it could be creating a little bit of a hammer-type candlestick formation, and that's why it throws a little bit of uncertainty here. We'll look at the S&P chart here in just a second. But sentiment, this should back off a little bit more too. Now, again, with all these indicators, you get a day or two of a really strong move, and it could push these into extreme ranges pretty quick. But so far, again, I'm not seeing anything on these that's telling me that the market is overbought. However, like I said, when I looked at the individual chart, you can see here on the S&P 500. Now, the key for me today was watching yesterday's low. I felt like if we broke that low, and if you watch the market this morning, we opened and we went like right to that low, and we held there for about 15, 20 minutes, and then it broke through it, and that's where it kind of sold off to this extreme down here. Now it's come all the way back, and it's kind of created a little bit of a hammer formation. Now, when I look at the SPY chart, if it closes like this, and another thing I'd probably want to look at is the volume for today. Let me put the volume bars on here. And it's hard to tell. It looks to me like volume will be equal to the last few days, or maybe even a little bit lighter. Although sometimes the volume, the bars on the chart here lag a little bit. But if it has that reversal on lighter volume, then that would not be good. You'd like to see heavier volume on a bullish reversal day. But what I'm focused on a little bit more than this, though, is the Russell, because it hasn't come off its lows very much, and it's right at the low of yesterday. And yesterday it had a bullish reversal candle that kind of failed. And so I'm watching. I'm going to be watching at the end of the day. I think that if we close below yesterday's low, I think that's going to be pretty bearish for the Russell. And I just have a hard time seeing the market rally without the Russell participating. Now, it's possible that there could be a rotation that comes out of the small caps and into the Dow and into some of the big, maybe the big tech, the big cap tech stocks before a bigger pullback happens, and maybe we see a few days where the Dow is up, but the Russell is down. But I think that's something to pay attention to, because it could be that there's a little bit of weakness there. Now, if we do slide, I would anticipate that we'd come down to this previous high right here, so around 216 or so on the IWM, and you can do that on all the charts. Go back to the S&P. I would probably assume we'd pull back right into that area right there. I think that's about 386 or so, 385. That might be 386, but right back into here. In fact, I guess I could just put my mouse over that day. What's the high of that day there? Yeah, about 385, 85. So yeah, pretty close to 386. So that's not that much further to drop. But it's feeling a little bit weaker this week, and if it breaks that, you're looking at coming all the way down to here, which would be about 368. That would be a little bit bigger correction. That'd be more in line with what we saw back in October. Let me take the volume bars off here so we can see something like this. And actually, I'd like to see something like this, because that's what created this big move right here. I had a really good November, and you can see why. Almost every day we went almost straight up off of that pullback. And even the sell-off we had back here in September, there was a nice run-up right here in October, first part of October, where it kind of took off. And I think that's kind of what it needs. I mean, even right here, we had the sharp sell-off. We rebounded pretty quickly there. So a lot of times these little sharp sell-offs can create good buying opportunities. Now, the point being is, as far as going over this, before I go over the individual stocks, is just keep that in mind. It might, even though we're talking about some specific stocks you can consider. Now, usually we're waiting for confirmation anyway for those to go back to a buy signal. But in market conditions like this, it's even more important to kind of wait for that confirmation, because sometimes you just want to jump into something just because I'm mentioning it, but it could be a little bit more of a rocky ride. It could drop a little bit further, and you'd wish you might have waited for it to bottom out a little bit before you got in. The benefit of waiting for confirmation is when you get into a trade, you want it to perform right away. It's not always going to perform right away, but you don't want to get into things and always have them drop and feel like you're always waiting months before it just gets back to break even or something like that. And a lot of times when you wait for that confirmation, wait for it to go back to that buy signal, a lot of times it's ready to take off, or pretty close to being ready to take off at that point. You don't have to spend much time underwater. All right, so that's kind of what we're dealing with. Conditions we're in. The VIX also spiked up this morning, but it's backed off the highs. It's come back down. That's another thing I'm watching to see if we happen to break if we come back down in the last hour and a half or so, and come back to the lows of the day, and that VIX closes near the highs of the day, I think that'd be very, very negative. If it happens to hold right here, and even if the Russell were to come back a little bit more, it could be that we rally a little bit further. But I wouldn't be surprised if it's more of that sluggish type rally. I mean, kind of what we got right into here. Last week we did move higher through the week, but it didn't feel like it because it was mostly kind of flat. It was sluggish, and we saw that back in here as well. But notice how prior to these sluggish moves, what did you get? You get these little drops, and so that's what kind of worries me too. Is when it starts getting sluggish, it's telling you that the buyers aren't real confident there, and a lot of them are probably waiting for a little bit of a pullback, and it's very common to get that pullback. And I know this is kind of it's not a mathematical equation that you can follow. I know some of you that are you don't want to base a decision off of a feeling or something like that. I get that, but there's a lot of things in the market that you can't always explain. But if you can recognize that behavior, it makes you a better trader to be able to know when, hey, I don't want to be aggressively buying right here, because the market is acting sluggish, and usually when it's acting sluggish like this, you get a little bit of a sell-off or pullback, and you'll get a much better entry point if you're patient. All right, let's take a look at some individual stocks here. The retail sector is still at the top of the list. Kirtland, I won't spend much time on this. We're still kind of waiting on this one, but it does seem to be kind of forming that ABC pattern right here. You have a little bit of a bullish reversal candle today. Let me switch this back over to signals here, though. We still have a hold signal right here. We're probably getting, we're not close to sell yet. We're right in the middle here, but we do have a little bit of work to get back to the buy signal to get in. But if that is a bullish ABC pattern and it does go back to a buy signal, I think it's probably taking off at that point. And that's one we'll still kind of keep an eye on. A new one in that sector that I like, a little bit lower strength rank at 90, but this at-home group, HOME. I like the consolidation. Again, remember what you always hear me say, whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely is the key word there, to go after it's done moving sideways. So that's kind of why I like that. It's also consolidating on a breakout area right here, where it broke out from this high right through here. It's come back to it. We're hoping that holds a support. Now, it did go back to a buy signal briefly right here and then came back down. When you're in these sideways ranges, they can stay in these sideways ranges for a while. And that's why if you want an alternative to getting in on the buy signal, you could wait for it just to break out of the range. If it breaks out of this range up here, it gets up to about over $26 here, it'll probably start running at that point. All right, let's go into computer and technology. And look at this IZEA 98 strength rank. Now, we brought this one up before, and remember I talked about this, and I said I like the pattern overall, but I felt like it could still drop a little bit further. This kind of looked like wave A, wave B, and we get wave C coming down here a little bit before it takes off. And you can see that it's starting to drop a little bit here, although it's a little bit of it's barely higher than where it opened. It gapped down at the open. If it closes higher, it'd be a little bit of a bullish reversal, and it might still be in the sideways range here. And it might have a little bit further to drop before it's ready to go. But this is one I'm just kind of keeping an eye on, and I might bring it up a few more times as we kind of watch where as long as it kind of stays in that upper part of that list there. Under the holds here, 97 strength rank. I like this NNDM, Nano Dimension Ads. And again, you can see why it looks like this is wave A right here on the correction, wave B, wave C, has that real sideways look to it. It doesn't have to stop right here and go up. It could dip down a little bit further and go up, but it looks like it's in a corrective mode right now. Now again, if it does break out, you can use, if it does go up from here and it breaks out, you can use it should use, typically it'll go up about the same distance as the top of the correction to the bottom of the correction. You can use that as a projection of your expectation. Probably go further than that. I mean, you can see right here where it had a correction. You take that distance and project it higher. It blew that out. It went even higher than that. That's why it's just a rule of thumb and it's a guide. You don't necessarily have to get out of the stock when it gets up into that area there, but you might start, watch it more carefully. Watch for some sort of bearish reversal. So if I got up into that distance there, so, here's your correction. If I took that distance and projected it upward and you started to get in that area right here, I'd start watching for a bearish reversal candle. So this went up, 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 and then you got a bearish engulfing candle right there. I probably would have gotten out on that day. If it was just a trade, if it was an investment, you're looking more long-term, but if that was a trade, that would have been a good signal to get out. You start looking for weakness as you get into that target area. Now here is one back here. Again, you have this correction right through here. You can take that distance, project that upward. Look at that. I mean, it went just to that same area right there before it started to pull back again. But there, right at that same area, you had that bearish engulfing candle, bearish reversal right there. So as it's getting up into that area there, if I would have seen that, now that probably wouldn't have profited me that much because it was a very big move. But the point being is that these things I'm teaching you, they're not just some thing I made up that sounds real interesting. The stuff works. So, and a lot of traders use it. So it's something you want to be familiar with and to start applying. All right, let's take a look at one more here. I don't want to do a ton today just because, like I said, I'm a little uncertain with those conditions. And to be honest with you, there haven't been too many patterns I've liked. And that's another thing too. When you're going through these lists, if you don't see something that if you don't see a whole lot of patterns that you like, don't force a trade. That's usually the market telling you this is not a good entry point. We had this problem when I was doing these updates back in February when the market was in free fall. I'm trying to do stock specific classes and everything's falling, and we just didn't see much of anything we liked, and what we did like, you were waiting for confirmation, and many of those didn't go to a buy signal. They fell back to a sell signal. So again, you don't want to be forcing things when there's not a lot of opportunities. When the thing about it's always important to recognize is when the market is really strong and when it's a good time to get in the market, there's trading opportunities everywhere. You see trading opportunities everywhere. And it's almost like it doesn't matter what you trade, just pick something and it'll work. That's the way it was in November. Almost everything I picked to trade worked out. I felt like a genius. But when you're in those conditions where, there's lots of trading opportunities, lots of good patterns, then that's when you want to be a little bit more aggressive. Whenever I go through my watch list and I'm looking for trades and I can't find anything I like I said, that's usually a warning sign that you might want to sit tight for a few days. And sure enough, if I wait a few days, suddenly the market conditions can change a little bit, and suddenly there's a whole bunch of great patterns to trade. And that's probably a better time to be getting in. And I know it's hard. And when you have money sitting in your account, you want to use it. And when you hear about all these people trading GameStop and turning $1,000 into $100,000 or something. You get greedy and want the same result. But patience is always key. You're not going to survive the market long term if you can't be patient. All right, WTRH right here. I like 97 strength rank. Switch this back to signals here. Just went to a hold a couple days ago. But what I really like about this, you've got this kind of bowl-shaped move right here. And then you're seeing a correction off of that. So it's almost like a little bit of a cup with handle formation. Now you could wait for it to break above the bowl. If it breaks above the bowl, it'll have a tendency to go up about the same distance as the top of the bowl, the bottom of the bowl. So yes, this does have potential to have a big move if it breaks out of this range here. And whenever I see that it's been higher in the past back here, I'd like to look at a little bit bigger context to see if there's, I see a previous high right here. And if I take the top of the bowl, the bottom of the bowl, and project that upward, you're getting real close to this. So this is a great target to use if we break out of this. It should get up into this area here. Now, it doesn't always go immediately to that. But there's a pretty high probability that it's gonna get there. You can even make an argument that you have a little bit of an inverse head and shoulders, but that's when I went through that chart patterns class, almost all inverse head and shoulders patterns can be called cup with handle formations. And I mean, it doesn't matter. They're all predicting the same move. So I don't get too caught up with exactness. I used to have students correct me all the time on some of these. Well, Jerry, that it doesn't look like a cup with handle. That looks like an inverse head and shoulders pattern. And I'm like, okay, call it what you want. Call it a bald man standing on his head. I don't care what you call it. It's the stock's likely to go up. All right. All right. So those are the stocks that I'll kind of finish with there. And like I said, if you want to just take a break this week and wait for things to kind of settle out in the market, you can do that. Let's get into the training though for today. And what I want to talk about is context. I actually copied this from a trader friend of mine. He went into the office one day, and I used to kind of go in and see what he was seeing, and he would ask me what I was seeing, and we'd kind of kind of check our observations. I still do that just to some extent, make sure that I'm not. One of the things that can happen a lot of times is if I've got all long positions or call options, if I'm trading options, then there's a tendency. Obviously, I've got a financial stake for the market to go higher. If it doesn't go higher, I'm going to feel a lot of pain, right? Because I've got all these long positions. So there's a tendency to only look at reasons why the market's going to go up. You could have a bearish candle and I can dismiss it because I can find another, if I search hard enough, I can find another reason that would explain why the market's going to shake that off and it's going to go up. And you got to be real careful because you can get yourself into a situation where you're only seeing what you want to see. And I've had this happen with students all the time over the years, where they were, if they were trying to argue with me over market conditions or what the market looked like, one of the first things I would ask them was, what are your positions? What are you trading right now? And I could usually tell if they were letting the bias kind of creep into their analysis by their positions. Now, I'm not just saying that it doesn't happen to me. It happens to every trader, and that's why you have to kind of fight it. But anyway, this trader had this saying right here on his computer, and I ended up copying him and putting him above mine. And the importance of this is that it reminded me that I need to, whatever I'm seeing on a chart, I need to take a look at a different perspective. I need to, if I'm looking at the daily chart, and I know you can't switch from daily to monthly to weekly on TradersPro, but if you have another charting service that can do that, I think it's important that now we can look at longer time periods, which we will do here, but you want to look at it from a little bit different perspective, because if you don't understand the context of what you're looking at, you don't have anything, and you can make a lot of mistakes. Sometimes zooming out and looking at the bigger picture will make things a lot clearer. And an Elliott wave, the kind of the rule of thumb is you always want to know the context of your wave count at least one time interval above and one time interval below your trading time interval. So if I'm using the daily chart as my primary chart I'm looking at, which most people will do to find your trades, you'd like to at least check the weekly chart or go back a few years, as we'll do here on TradersPro, to see the context of what things look like in that longer term. And if you're able to go intraday, you might want to take a peek at the intraday chart. Now, I don't always go into intraday, because sometimes the intraday it can be all over the place and a little bit harder to read. Just so much stuff happening very quickly. But sometimes I'll take a peek at it to see how it's looking. But the point is just try to look at it from a different perspective, because it doesn't hurt, and it'll often either confirm what you're expecting, or you might see some things that could warn you. So if we go to our chart here, I could be seeing an uptrend in the daily chart and an ABC pattern right here on a correction. And I might be looking at this and thinking, boy, I'm going to get in this and I'm going to trade this thing for the next 8 months or 12 months or something like that. But if you back down and you looked at the context of it, you might say, boy, this looks like a larger wave 1, wave 2, wave 3, wave 4. It looks like we're in wave 5, and within wave 5, this looks like wave 1, wave 2, wave 3, wave 4, and we're probably in the last push of this trend. Now, again, it doesn't mean that I still can't trade it, but notice now how my perspective changes. Now I'm probably thinking, instead of a 8 to 12 month longer term trade, I'm going to take a little bit of a shorter term approach, and I'm only going to expect the stock to go up maybe $5 or so, $6 or $7 or something like that. Is there a trade I can do based off of that expectation, based on the context of what I'm looking at? We did this a little bit with Jumia when we looked at. We can look at that one again here too. But the longer term chart, we backed out. It looked like we're near the top of Jumia now. It still doesn't mean you can't trade Jumia, but you'd probably want to be have shorter term expectations of how far it's going to go, because of the fact that we're probably near a top on that and are due for a bigger correction. I don't want to be forcing that eight month trade, see some nice results early on, and then go into this big ABC correction. Now, on the other hand, when we zoomed out and when we were looking at Zoom, I guess that I didn't mean the pun there, but when we zoomed out on Zoom, we noticed that it had a long run up, and then it looked like it had this larger ABC correction. We could take a look at Zoom again here in just a second as well. And the context said, hey, this thing could be ready for a big move higher because of where it was within the cycle. So this is probably one of the most valuable parts of Elliott Wave, and I know I've kind of gone over this in pieces as I've talked about it, but being able to know where you are or likely are within a trend is very valuable. And again, it still isn't going to tell you what's going to happen next, but it helps me in the management decisions, whether maybe I still get in that trade, and maybe I still expect a bigger move because it's possible we could have a really long wave 5 that really gets extended, and so I just make sure I have a tight trailing stop on it. I let it keep going as far as it wants to go, but I know I'm probably at the end of a move, and I don't want to get caught when it comes back down. And so maybe you trade up to here, and then it starts this move down, and maybe you get stopped out on that first move down. You don't make very much, but you avoided having it turn into a loss. Maybe with something like Zoom, when you're expecting a much bigger move up and you feel like you've had the correction, you might give it a little bit of a wider stop, a little bit of a little bit of room in case that bottom isn't exactly done yet. Maybe it has one more move down, and you don't want to get bounced out of it. You don't mind being underwater a little bit, but you don't want to get bounced out too quickly because you have that big potential upside. Well, again, that's a decision you made based on the context of what you're looking at. Remember how I talked about, and again, you can combine this with those wave characteristics we talked about last week, where, what would we say? Wave A was kind of the breakdown of the trend. You have this pullback right here. But what I say very often is the feeling at the end of a wave A. It feels like a buying opportunity, right? Well, if you get that break of the trend, and then it feels like a buying opportunity, but it's still sluggish. It's a little bit more choppy back and forth. Well, I can combine that characteristic with the context. I can look at the context and say, hey, this looks like 5 waves up. This looks like a wave A. It feels like a wave A it feels like a buying opportunity, but it's been sluggish as it's been going back up. It's kind of choppy. That's acting like a wave B, a sucker's rally. We probably have another move lower. Now, I could maybe try to trade that. I could short the stock or buy put options and try to trade that move. Or my decision might be, hey, let's just put this in a watch this and wait. Let's see if we get that one more move down, and then we'll revisit that. And that's kind of what we're doing with IGEA. We can look at. We'll look at that here in a second. But it feels like it's kind of in that wave B, and it has that one more move down before it might resume the trend. Now, another thing that I look for when I'm pulling up a chart is I don't get too caught up with trying to always get the exact 5 waves within these waves. In other words, what I immediately do when I see an uptrend is I look for it, and obviously this is going to be in hindsight, but if I see a trend that's established, what I try to look for is do I see 2 main corrections? Do I see 2 rather large corrections within that trend? If I do, I assume that there are wave 2 and wave 4. And if I do see 2 real clear corrections, larger corrections, I don't get too caught up with getting an exact wave count within these. So like I said, you're not always going to get this clear cut wave count. You can look at some charts and it'll say it'll be done with this move right here, and it'll look like there are 3 waves or 3 or 4 waves or something like that in there. You can't see all 5 waves. But again, I'm not going to get fanatical about it and kind of force a wave count on it. If I can see 2 decent corrections, I'm going to assume those are wave 2 and wave 4. Now, they also have to follow the wave rule. So if you're saying this is wave 4, this is wave 2, this is wave 4, and wave 4 is trading in the territory of wave 1, then that can't be a wave 4. But what it could be is that this is still wave 1, wave 2, and maybe this is wave 1 of 3, and this is dipping down in the territory of wave 1, but this is just wave 2 of 3, and you've got this extended wave. There's a possibility you could have something like that taking place. Now here's an example, and then we'll look at the live charts here in a second. And this is a real old slide. This is back when I first started coaching this stuff. So luckily I think eBay's still trading. I think eBay's still, some of these companies don't exist anymore. Some of my example slides from way back when. But so here's an example of backing out. See, sometimes we get so focused on that 6-month chart. And if I'm looking at the 6-month chart, what weight count might I give this if I'm just focusing on here? Well, I might look at, here's a correction. Here's a correction right here, it looks like. I bet this is wave 1, wave 2, wave 3. This is wave 4, and we're going to go higher for wave 5. So I'm going to trade this thing higher. And you double check your rules. You say, well, there's wave 1. Wave 4 doesn't trade in the territory of wave 1. Wave 1 is already shorter than wave 3 right here. So wave 3 isn't the shortest wave. Wave 2 didn't go below the beginning of wave 1. So it follows all the main rules right there. And you might be had a little bit of a bullish reversal day right here. You might be getting ready to buy the stock or buy a call option on it or something, betting on that thing going higher. But if you took an extra moment to back out, you might see something different. Now, in this case, I'm going to back out to a monthly chart. A monthly chart is where each one of these bars or candles represents 1 month of trading. So it's going back several years. Okay. Now, by the way, you don't have to go out so tons of years, and just because you see something in a monthly chart doesn't mean that it's going to tell you immediately what's going to happen. But it gives you just a different perspective. And this is what I saw on that weekly chart. You saw that it would look like this was the end of wave 5 on this big run up right here. Had a big sell up right here was wave A. And that what looked like 5 waves was actually an ABC, a bearish ABC pattern, completing wave B, and this thing was on that long-term perspective was much more likely to drop in that wave C. Well, again, it doesn't mean the stock still couldn't go up in the near term, but doesn't that change your perspective a little? Now you say, well, boy, maybe instead of trying to trade this last part of this move, it might have one more move higher here. Instead of trying to catch that last little move, maybe I ought to wait for that move and buy a put or short the stock and try to trade this move down. Or you might decide just to stay away from this altogether for several months, because this is a monthly chart. It might take several months for this thing to drop in that wave C, and wait until it bottoms out in a few more months and then come back and try to buy it down here. But again, seeing the context of it helps you with that perspective. Now, it ended up, if you even went to the weekly chart, you had, this is where each bar represents 1 week of trading. You had it looked like a complex correction here. This is wave A. Then we had wave A, B, C. This is a WXY. I'll go over complex corrections in a class 2 briefly. I'll show you an easier way to apply the concept of complex corrections. But it looked like this was ABC completing that correction, and this was starting to move down. Now, it's also possible that it was that there could be 5 waves here. That maybe wave B ended right here, or this could have ended X right here, and that could have 5 waves in for wave C, 1, 2, 3, 4, 5. Might have that one more push higher. Maybe that was if we go back to that, daily chart, maybe this is a bullish ABC pattern, and it still could have one more move higher. Again, the point is, you see how it changed our perspective, and so now it forced me to rethink what I want to do. And so I'm not saying that the Elliott Wave is going to tell you the exact thing to do, but again, more information now to decide on whether I want to go forward with the bullish trade, or I want to move on, or maybe I consider shorting it. Now, one thing you could also do with wave rules is you could say, okay, if we are going down and this is actually heading lower from here, then this is probably wave 1, wave 2, we're probably in wave 3. Okay. If we move up, though, if we move up above here, maybe you do want to do a short-term bullish trade, because if this moves up up here, it breaks a wave rule. This can't be a wave 4 going into a wave 5 down, because wave 4 can't trade in the territory of wave 1. So if I wait for a little bit of confirmation, I might have a much stronger probability that this thing could go up a few more dollars. And again, maybe I say, hey, a trade from $45 to $48 wouldn't be too bad, or higher, and that's a pretty good move. Or I might decide, hey, because it's a short move, maybe I can get a little bit more leverage on it by buying an option on it, a call option. By the way, we'll go over trainings on options too here in a little bit. I think that's what we're going to do next. I have to see what my schedule is for the trainings, but I think we're going to get into options next. And you might decide to, hey, I could, you know, I mean, you get a $3 move on an option, you could double it. You know, you get 100%, 200% return on something like that. So the point is that, again, is it context. Now let's see how we can apply this to what we've been looking at. Let's just take a look at Kirkland, K-I-R-K. And what we're looking at is we're looking at this ABC, and we're expecting Kirkland to go higher. Okay. Let's back out and see if we have some different perspective. Let's go to, you can go to a 1-year or 2-year chart. I'm going to go right to a 2-year chart. Now, I see, if I were to say what are the two biggest corrections I see, I would say this one right here and this one right here. So again, and by the way, when you, a lot of times I'll do a rough wave count, just something that first, kind of my first reaction to what I think I see. But that, again, don't get so focused. You know, that doesn't have to be your final wave count. You can make adjustments to it, but I like a starting point, you know, and usually a wave count will jump out at me if it has a pretty good pattern to it. Okay, if it's chaotic and all over the place, I don't even mess with trying to. If I pull up a stock and it's doing this, okay, I'm not going to try to find a wave count on that. Okay, but it doesn't mean I can't trade it. You know, it could be, let's say it's doing this. Yeah, I can't do a wave count, but I could say, okay, well, let's trade the range here. Let's get into it and trade it to the top of this range. It's been going up to the top of that range 3 other times here. You know, so my trade isn't based on Elliott wave. So that's where it gets back to the don't be fanatical about this. Don't feel like everything has to be based on Elliott wave. As soon as I pull up the chart, I know I'm not going to be basing this trade on any sort of Elliott wave analysis. But this one's a clear uptrend with some corrections in it. So I could have a possible valid wave count there. So I'd look for my larger corrections right in through here and right in through here. I say, okay, if that's wave 1 and this is wave 2 and this is wave 3 and this is wave 4, well, here's a little bit of a correction right into here. Well, you can remember within the longest wave, and wave 3, if this is wave 3, it is looks like the longest wave right here. A lot of times you can see 5 waves within that larger wave. So then I come back to here and say, instead of saying this whole thing is wave 2 right here, wouldn't it fit a little bit better if this is wave 1, this is wave 2, this is wave 1 of 3, 2 of 3, 3 of 3, 4 of 3, and 5 of 3. And this ABC pattern we're looking at, or possible ABC pattern, could be a wave 4. Okay. Now again, this thing could go higher, and it could have a move like this, and then it could be wave 5, and it could go into a larger correction. And we could be looking back, and you could be emailing me later on saying, you're a genius. How did you know that? And my first response would be, well, we probably got lucky that it worked out exactly like we thought it might work out. It's not, the point of this is not to know exactly what the stock is going to do. I want to balance it out with everything else. But, and this gets to the key point of today, from a context standpoint, are we in the early stages of this uptrend, or are we likely in the later stages of this uptrend on the stock? It's probably more likely we're in the later stages of the uptrend. And it's possible, it is also possible that maybe this is end of wave 5 right here. And we've already started a bigger move down. Now, I don't think that's the case because this whole thing looked more choppy, more sideways, and usually that means we're going. Because again, I also don't, because I want to keep it in line with everything else I look at. What's one of the things you hear me say every update pretty much? Whenever you see a stock moving sideways, you want to pay attention to the direction or trend it was moving, and before it moves sideways, that's where it's more likely to go after it's done moving sideways. It just has a feel that it's got another move up. Not to mention that, if this was, if this is wave 1 and this is wave 2 and you're starting wave 3 down, well, first of all, this doesn't look like a wave 3. It's more choppy. Usually wave 3 would be a real sharp drop. But then you have to run into, well, is wave 2 trading above the beginning of wave 1? It's real close there. It just has a feel that it's moving higher. So how can I use what I've analyzed here to help me on this? Well, my expectations are going to be for just probably a shorter term trade on this. Have it break out. You could use, like I said, if it does break out, it'll probably go up about the same distance as the correction right there, the top of the correction, the bottom of the correction. So that might be my trade, is just trade this little move right there. And when we get into options, options are something you can really take advantage of these types of moves, because the nice thing about wave 5s, when you're in wave 5s, is that the momentum is always there. There's buyers. People like the stock. And now they're obviously they can get to a point where they're too bullish, and that you might want to gauge that. If everyone is saying to buy Kirtland and it's going to go higher and there's no doubt about it, then you want to stay away from that thing altogether, because those are characteristics of a top. But it's not that way. How do I know that there's not everyone's not fanatical about Kirtland? It's real obvious. It's totally obvious. How? Well, because it's been chopping sideways. That's not. This is confidence. This is lack of confidence. But that's another reason why I don't think the stock is at a top yet. It probably has one more push. Now, if it has a sharp move higher and it breaks out, yes, you can see where you could get that confidence coming in. And it's hard to gauge that. It's hard to gauge characteristics with individual stocks, because this is not every stock that goes into wave 5 is going to be, everyone's going to be talking about it all day long. But you don't have to have that. If you see just a real sharp move where it shows that buyers are really getting confident, and then the stock starts getting into that extreme reversal risk, now you start to say, okay, we're at the longer term perspective. We're at the top. We got to be near the top of the trend. We thought we might have one more push higher. We're getting that push higher, and it's acting like a impulsive move. It's going up, 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 and we're getting to an extreme reversal risk here. Maybe I should take profits off the table. Maybe I should tighten up a stop. I can start to make decisions based off of combining all this analysis. All right, let's see how another one of these. Let's look at Home, HOME. Again, similar pattern. We're seeing a corrective move right here. Nice little uptrend. Let's check the larger trend. Let's go to a 2-year chart. Okay, here's a real obvious sideways move right here. And here's a little bit of a smaller corrective move right there, and then you have this corrective move up here. Now you had a big decline right here, so I'm assuming that this is a bottom down here and that this is starting to kind of 5 waves up. So this would be, I would probably look, it's possible this could be wave 1, wave 2, wave 3, and this could be wave 4. Now what do we know about wave 4s? Wave 4, remember, wave 4 is a surprising disappointment. And remember, wave 4 characteristic is it can tend to be drawn out, a lot of back and forth. It can be, usually when you get these long sideways moves, they tend to be I usually assume they're wave 4s until proven otherwise, because that's a great characteristic of a wave 4, is just a long extended sideways move. So it's definitely valid that this could be a wave 4. And I think wave 4 probably ended right here. Now, why would I say that? Because it looks like this could be part of a 5 waves up for wave 5. Wave 1 of 5, 2 of 5, and this looks like wave 3 of 5. And that ABC pattern I'm looking at might be wave 4 of wave 5. And again, this might have one more push higher to complete that trend. Now, what's another possible wave count? Well, because this was such a small correction, this was such a bigger one. Could it be that this is a wave 1 and this is wave 2, and we're just starting this trend? This is wave 3, this is wave 4, and then we'll get wave 5, and that'll complete that larger wave 3. And this trend has a lot further to go. Well, this is why we have the wave rules. Well, if that's the case, then a couple problems here. Number one is that this would be a very short wave 3. Now, again, this would be a very long wave 1. As long as wave 3 isn't the shortest wave, it could still be valid. But again, this doesn't have a real feel for wave 3. Wave 3 tends to be the most powerful wave. And remember, what I also tell you, I said, if wave 3 isn't the longest wave, what's the second most likely wave to be the longest wave? Wave 5. Very rarely you're going to get wave 1 as the most impulsive wave. Well, in order for that wave count to work out, wave 1 would have to be the impulsive wave, and it could be, but now you got to ask me from a probability standpoint, is that likely? And I'd say probably not. So again, if I go back to my 6-month chart, I'm probably looking at a trade this thing just a shorter term trade off of this. Let's pull up Zoom. Go to a 2-year chart. Now, in this case, we have what looks like a larger ABC correction. So a lot of times I'm not even going to mess around with trying to find 5 waves now. I don't need to. This was a move. Here was a larger correction. In other words, we go back to the slides here. I don't need to worry about this right now because it looks like this has taken place right here. And so I'm focused on seeing if this has ended and do we have potential for a much bigger move up. Now, let's go to a 1-year chart on here so we can see a little bit more detail here, but not be zoomed out as far. Now, I am looking at this as being wave A, wave B, wave C. Now, another thing about this too, we can add in those. Let me go back to a 2-year chart. We can add in. I got to go over time a little bit here. Hopefully that's okay. one of the reasons why I believe this is wave A right here is it broke. Oops, it broke the trend. I can draw a straight line. It kind of broke the trend on that. It really broke it on this last run up right here, but it broke. It kind of, the selling broke the trend, bounced, and then came back down here. You could even, now you should have 5 waves in that move down, that first move down. Looks like 1, 2, 3, 4, 5, wave A, B, C for wave B, and that looks like 1, 2, 3, 4, 5 for wave C. And what I was looking at is the possibility this is wave 1, wave 2, and we're heading higher. Now we're down the last couple of days right here. So what's going to be critical on my wave count, I got to draw a line across here, because if this is a wave 4 of some sort, wave 4 can't trade in the territory of wave 1. And I need to recognize, again, zooming out, I need to recognize another possibility, which is that maybe this is just wave A. Maybe this is a bearish ABC pattern for wave B, and this has a lot further to drop for wave C. Now, I think what I would probably do if I was worried about that, but I recognize there's probably tremendous upside potential there, is if I did enter a trade, I'd probably take this spot right here as my stop. You say, well, why not right here? Because if it trades in the territory of wave 1, well, it's still possible this could be wave 1, wave 2, and this could be wave 1 of 3. And if that is the case, wave 2 of 3 can come all the way back down to the beginning of wave 1. It can't go below it. So there's still a possibility it could get down in this area here and still be going higher. Although if it came down that far, it's not acting like a wave 3. Wave 3 get ups and goes. It takes off. It doesn't lag around. And if this comes all the way down here, a wave 2 of wave 3 is acting like it's not getting up and going. It's not acting like a wave 3. But that's one area that you could put as a stop loss. Because if you break below that, then I'd say, man, maybe I'm wrong. Maybe this is just wave A, this is wave B, and we got further to drop. You see how you can use this stuff to make decisions? And again, nothing I've gone over is magic. Nothing I've gone over is telling you exactly what's going to happen next, what the stock's going to do. But context, it gives me context. And then with that context, I can make decisions and I can manage my trades, trade management, money management. Those are still the key to success. But when you have this, it helps you make better decisions when you can apply this to your charts. All right, thanks everyone. Sorry I went a little bit over time today, but it's kind of fun to kind of see that this can be applied. It's not just gibberish that we've talked about the last several weeks and is meaningless, but you can apply it and helps you with your decision making process. All right. Again, reminder for next week. I'm going to be out of town. There may not be the live class when you're logging in. If that happens, just look for the recording. Hopefully, it'll be posted soon, and you can review that. All right. Thanks, everyone. See you next week. Bye now.